Please welcome to the stage Daniel Gorfine, founder and CEO, Gattaca Horizons, Chrysty Esperanza, Chief Legal Officer, Block, G. Kim, CEO, Crypto Council for Innovation, and Amy Roberti, Head of Global Government Relations and Public Affairs, Stripe.
Okay, great. Well, thank you so much, and welcome to our panel discussion today, where we're going to talk about how digital assets and crypto intersect with Main Street. We'll talk a little bit about opportunities for small businesses and small business owners, some of the challenges, and perhaps most importantly, we'll do some education here about the digital asset industry and how it may be of benefit to Main Street. So joining me, I have an incredible lineup of panelists, Chrysty Esperanza from Block, G. Kim from the Crypto Council for Innovation, and Amy Roberti from Stripe. So with that, let's just go ahead and dive in. And G, I'll start with you. So despite there being this government shutdown, remarkably, things have actually happened this year in DC. We saw the passage of the Genius Act, which G will explain a little bit further to our audience, but we've seen stablecoin legislation. There has been some movement around what's called market structure legislation. There's been a lot of regulatory developments. Help the audience understand, G, like what has happened in Washington and how it's helping to make digital assets and assets like stablecoins a little bit more viable for small businesses.
Thanks, Daniel. First of all, it's great to be here today and very much looking forward to this fun, robust discussion. You said it best. It's been an amazing year when it comes to digital asset policy here in Washington, D.C. The industry has gone through, and previously, a regulation by enforcement approach, and we've seen a shift away from that with the government providing regulatory clarity and certainty to the digital assets industry. Obviously, if you are a small business, a merchant, you want clear rules of the road. You want to know that the tools that you're using for payment purposes are durable, that they have sort of the federal approval, so to speak, from a legislative perspective. And we've seen all of that this past year. As you mentioned, the Genius Act, Daniel, which is a comprehensive federal legislative framework for stablecoin issuers, was passed by both chambers of Congress in a bipartisan, overwhelming fashion. This provides clear rules when it comes to redemption requirements for stablecoin issuers, the reserve requirements, how stablecoins should hold their reserves with what type of assets. And this is also brings federal legitimacy to stablecoins, in my opinion, to provide that certainty to small businesses and merchants that if you're using digital asset payments, using stablecoins, you know what to expect from the legislative framework. Now we're going through what's called a rulemaking process where the relevant federal and state regulators will take the principles in the Genius Act and really, drill it down into even more clear rules of the road as to what the industry should expect from when it comes to oversight and supervision. And lastly, market structure, which is oversees all other aspects of the digital assets industry. So if you're a cryptocurrency exchange, how you should be regulated by whom, whether a digital asset is a security or commodity or neither. We've also seen progress on that front. The Clarity Act, which is the House's version of the market structure bill, passed the House, again, in bipartisan, overwhelming fashion. The Senate is working through their version of the bill. Obviously, the government shutdown has complicated things a little bit, among other factors. But this will bring even more certainty and clarity to the industry, but also for exchanges, payment processors, as to how to build the durable payment tools to really help businesses, small, medium, and big.
Oh, fantastic. And so, against that backdrop, Amy and Chrysty, I'm going to turn to each of you, and Amy, I might start with you. But your companies are on the ground trying to integrate some of these payment solutions into point-of-sale systems or into online merchant flows. So Amy, from your perspective, how are you building towards these technologies or to incorporate these technologies? And I think especially in the cross-border, you guys are a global company facilitating global commerce. How do you see that playing into what you're building?
Yeah, first, congratulations, G and others, on the Genius Act. And we haven't seen anything like the demand from businesses, big and small, to understand how they can use stablecoins for their business. We can barely handle the demand coming in, which I think is really exciting. And maybe just taking a step back to explain Stripe a little bit, we're we're built on small businesses. Like the companies that started with Stripe, it was two brothers from Ireland founded us, came over to the US, San Francisco, when they were teenagers, and all their friends were building apps, but they realized that it was really difficult to like monetize the apps, the cool apps they were building. And so they created 7 lines of code that you could cut and paste into your website and start selling globally. And so the reason I share this is because if you think about the opportunities that opened up for small businesses, and for Stripe, a lot of companies started on Stripe like 14 years ago as a small business like Shopify or Warby Parker, and they could instantly sell their products globally. Imagine with stablecoins the idea that you can now open it up to the globe. Like we've been in 50 countries, like with fiat currency, and now with stablecoins, like there's access to over 100 different markets. So just the promise, I think, for businesses running on Stripe and Block and others to be able to access those markets and do it in a way that's like cheap and fast and safe and doesn't, require like a bank partnership to integrate or something like that, I think is just revolutionary. And so there's a lot of different ways that we're enabling that. We actually had Bitcoin as a payment method like in 2016 because our users wanted it, and we realized like it was actually a really bad payment method, and so we stopped. But then just a few years ago, like users started wanting to use crypto more, and so we're doing like crypto on and off ramps. But I think the real promise for small business is going to be around stablecoins for both cross-border sales, like into places that normally you couldn't transact with. And also, if you think about just programmable money movement and the need for any business, big or small, to be able to, like in a cheap and efficient way, move money around, pay suppliers, operators, anything else, stablecoins offers a really great solution for that.
And we'll come back to some of these benefits as well. But Chrysty, let me turn to you. Block has been a pioneer in this space as well. Tell us what you're building and integrating for small businesses. And I know Bitcoin has been a big area of focus for the company, so help us understand, how that fits.
Yeah, well, first, thank you for having me here today. So at Block, we've long been enabling digital payments, and similar to Stripe, small businesses were one of the customers that we serve. It started back in 2009 under the premise that we wanted sellers to be able to take a payment any way they wanted. The little square white reader, I think, is what we're most known for. And back then, that was connecting buyers and sellers in their neighborhoods, allowing them to take that transaction. And since then, we've spanned to Cash App, where you can buy and sell Bitcoin on the consumer side, Afterpay, and then we also have emerging businesses around Bitcoin. And even though we've scaled quite a bit, we're much larger now, our mission remains the same. It's increasing economic empowerment, and digital payments is a huge part of that. And we know that's really vital to the livelihood of small businesses. But we didn't want to stop innovating there, and we see Bitcoin as another method of payment and something we think can be everyday money, not just stored value, but something you could use as a daily tool. We recently launched Square Bitcoin, which essentially allows sellers to take Bitcoin and convert 50% of their sales. And they can do it right through their Square dashboard. It's the same interface, which makes it very accessible and easy for them to see. And then starting November 10th, we're going to also launch a fully integrated Bitcoin solution where sellers can also take Bitcoin as a method of payment and have 0% in fees over the next year. And if you happen to be at DC FinTech Week, tomorrow we'll actually be demoing this at Compass Coffee, where you can get a QR code and then pay for coffee every day, an everyday item with Bitcoin.
Okay, so let's drill down a little bit into this value proposition, and I'll ask all of you, but G, I may start with you. Small businesses have many different payment options or solutions they can consider. There's a lot of traditional approaches, whether that's through credit cards or debit cards. You can use cash. Sometimes these systems are viewed as being potentially expensive or potentially slow. Talk to us about digital assets and help us understand too, like stablecoin versus cryptocurrency. What's the value proposition? What should small business owners be thinking about?
Yeah, this is a very important question. So to me, the value proposition for small business in particular is that digital assets remove the middleman, the middle person from the transaction. So this means that for a small business, you can take more of the margins. And I think the numbers and the data actually support this. This is beyond being just theoretical. There are three key pain points, in my opinion, that digital asset payments do address. One is cost reduction, which improves savings margins. Two is speed, which improves cash flow. And third is cross-border utility. So to go back to the first one, for cost reduction, typically when you factor in interchange fees, payment processing fees, you're looking at 2 to 4% in terms of transaction fee. For a stablecoin, the fees can be less than 1%. So this is a savings margin that goes directly to a merchant. When it comes to speed, typical settlement windows can be anywhere from 24 to 48 hours when you look at traditional options. If you factor in cross-border transfers, wire transfers, for example, that could be anywhere from 3 to 5 business days. But again, when you put the digital dollar on the blockchain, so to speak, you're looking at a settlement of minutes, if not seconds. And this means that if you're a small business, it simplifies treasury management, you can pay your suppliers more instantly, and it's a lot more fast, obviously. Lastly, Amy touched upon this as well, but cross-border utility. If you are a small business purchasing supplies or materials from overseas vendors or suppliers, when you factor in, again, the wire transfer fees, increased FX costs, that could be additional fees of 5 to 12%. Whereas, again, with stablecoins in this example, that would reduce it to be cost-effective almost instantaneously when it comes to the factors for all of this. So these are some of the things how I think about, Daniel, the benefits that digital asset stablecoins bring to small business in particular.
Great, and let me open this up to Amy and Chrysty as well, like additional value proposition that you all see for customers and small businesses.
Yeah, I think if you talk to, G hit them all, but if you talk to any small business and when we talk to our users, like the difference between, instant payment settlement and like waiting 24 hours can be the difference in people like getting paid. And so small businesses are like the most sensitive to timing like that. And you get the benefit you should get the benefit of your money instantly. And so I think there's like a fairness aspect to that too. So I see a huge opportunity for small businesses to benefit. And then just like the price, I think moving money is way more expensive than it should be. And we all don't realize the possibility because we're just so used to it. But I think crypto like introduces us to that possibility of like, wow, it doesn't have to cost this much. And so if we can do it in like a regulated, safe way, there's, I think, huge opportunity and small business should benefit first.
Yeah, let me go to Chrysty, and let me also ask you to maybe just explain to folks, what does this look like for a small business owner? Because to be very honest, I think many people hear about this, but is it the same widget, the payment app that you're using to accept payment? Like, would we have to download some kind of a wallet and write down, 64 hashtag, letters and numbers in order to access it? What does this look like to the small business owner?
I mean, it's a great question, and I think the education piece around use of crypto and around use of Bitcoin is also really helpful because I think there's still some misconceptions as to what is out there. But as far as the customer experience, for Square, it's all in the same app. So it's a fully integrated platform that is right into the Square wallet, the Square dashboard, and you would see it in the same interface. So it's not downloading a new app. You would go through the regular IDV that you would normally go through. We have the same type of risk controls that we would have.
Okay, so you can select, I'm willing to accept payment in stablecoin or in Bitcoin, and the merchant will receive that in the same way as you'd receive payment otherwise.
Exactly, yeah. It would be like accepting payment through credit card, cash. It's just another way for customers to be able to pay and for merchants to be able to receive. So it's another connection point, which should make it easier for small businesses. And in addition to it being quicker, lower transaction costs, for Bitcoin, there's more transparency as well because it's an open protocol. So I think that's just another added benefit.
And what does that, again, help everyone here understand, what does that mean, that it's more transparent, it's an open protocol?
So for Bitcoin, all of the transactions are on the blockchain, and you would be able to see them. They're out in the open.
Okay. And that can even be effective if you're worried about money laundering, financial crime. There is actually a record of those transactions.
Exactly. Yeah, that would be the single source of truth. Would be that ledger.
Okay. So let's flip around though and talk a little bit about some of the challenges. And again, I want to differentiate a little bit with like what are the pros and cons of stablecoin versus traditional cryptocurrencies. I know with cryptocurrencies, volatility is one thing that people are concerned about. If I'm going to accept payment in a potentially volatile asset, does that work well for a small business? So, Amy, I might start with you. What are the biggest challenges that you see, and how do you educate merchants or mitigate some of those risks?
Yeah, well, I think some of the biggest challenges that we saw that we're trying to solve for is similar to what Block has done. I have a Cash App Bitcoin wallet. But I don't know if anyone in the room, I can't see you very well, but if you've tried to set up a crypto wallet, it's really complicated. You have to remember like seed phrases, and if you get it wrong, you've like lost everything. And so I think it's just like a barrier to entry because unless you're a crypto enthusiast, you're not gonna like take the time or the risk to do it. And so like making it easy like Block has, and we just acquired a company called Privy, where it's just like an embedded wallet. So it's from start to finish. You can just like manage your money across the spectrum, and then eventually we'll have payments rails, like an L1 blockchain, but just making that easier for people so they're not going to like 10 different places to try to like put it all together, I think is the key. And that's not always true in other aspects of commerce where you're like, you use one software product for one thing and something for another. Like if we can just streamline it, I think it's incredibly helpful.
And Chrysty, maybe I'll go in a slightly different order, but I'll ask you the same question. What are some of the bigger challenges that you see? And I'll throw out a few risks as well. We talk about Bitcoin, thinking about things like volatility. The other thing I think a lot of small business owners are concerned about is whether there's fraud or disputes with a customer. The need for, with chargebacks, like how does that work on a blockchain? Is it consistent with those concepts?
So I think that is one of the challenges, and we do employ the same risk controls, identity verification, and know your customer around disputes and around those types of controls. Another area of challenge, particularly in the policy space, is around taxes and the capital gains treatment of Bitcoin. Right now it's taxed twice, both at the time of discovery and then also at the time of sale, which we think is a huge disincentive because if you're going to be taxed with Bitcoin in a way that you aren't taxed with other forms of payment, it'll disincentivize people from using Bitcoin. So one thing that we're hoping to really lead the way in is for that de minimis tax exemption.
Yeah, if I could jump in quickly. Chrysty brings up an excellent point. The U.S. is unfortunately behind when it comes to tax treatment for digital assets. When you look around the globe, in certain EU jurisdictions, there is a de minimis exemption for everyday transactions, including crypto. In the UK, there's a 3,000 British pound annual allowance for everyday transactions, again, when dealing with crypto. So that means that when you buy a cup of coffee or a taco, one of my favorite foods, in Munich or London using crypto, you won't be taxed, but in Washington, D.C., you will. So in order for us to bring in even more adoption and traction, tax clarity is actually essential to unlocking this for small businesses and the industry at large. Just going back to your...
And where are we on that, G? Like, are you working on it? Are you solving this right now?
CCI is, along with a lot of other industry players and actors, including, of course, Block and Stripe. So there has been progress. I'm a very hopeful person. We've seen both the Senate and the House work on draft text legislation addressing these issues, including de minimis exemptions, capital gains, and many other tax treatments. But there's still some ways to go, I would say. I think, as we discussed at the outset of this conversation, market structure is sort of the next top priority for many. But again, CCI, we are a global trade association advocating for our members. We've also said tax has to be right there in parallel with market structure in order for us to really unlock this potential and gain massive adoption here in the United States.
Great. So let me ask just one kind of final question on some of the risks. Fraud. Fraud is a challenge across all digital commerce these days. How do you all think about fraud? Are the levels and rates of fraud similar when you're in the digital asset ecosystem to what you're seeing with other payment solutions? Can it be part of the solution actually? So I'd open it up to whomever.
So we take a really science-led view on fraud, and we use a lot of machine learning and tools to be able to detect and prevent fraud. In addition to the IDV and know your customer requirements that we put in place, we also do a lot of the detection and monitoring to make sure that we're protecting our customers from fraud, because we know that's a critical part of making sure that we've got a safe platform, not just for legal and regulatory reasons, but also for customer experience.
Yeah, I would say this is where I think public-private partnerships is so essential to using the public blockchain, as Chrysty mentioned earlier, and Daniel, as you pointed out, for law enforcement to really understand how to use the blockchain to go after bad actors. I think fraud in any shape or form, with any technology, with any financial asset is unacceptable, full stop. But I think the more the industry, the digital asset industry, can work with law enforcement officials to really use technology to go after bad actors is what we need. And I would also say, just to bring it back to the first question that you asked, Daniel, this is where regulatory clarity is so important. When it comes to the Genius Act, there are clear AML requirements, clear risk management procedures that typical insurers do have to follow and comply with. And as we have more of this regulatory clarity here in the United States, that will actually stamp out bad actors, in my opinion.
Yeah, and then I think AI is just like a game changer for fraud, like in the payment space, but I think will also be for crypto. And then just something I recently learned about is called friendly fraud. Did you guys know about that? Apparently,
Sounds unfriendly.
apparently people just like sign up for subscriptions, like the trial, and then they do it over and over. Like that's just one example of it. But a lot of these are like AI companies that people are using crypto to pay, and just like spotting trends like that, we'll keep getting better at it using AI tools, and the more we see like crypto for payments too.
So, Amy, I might stay with you and put you on the spot, because right before we came up here, we started talking about agentic AI very briefly. Yeah. And I know you just saw an excellent presentation right before we came on stage. But let's be futurists for a minute. And what you were excited, you were saying like we're moving into this agentic world. I think a lot of people struggle to understand how digital assets and open ecosystems fit into that future. Do you want to share some of those thoughts and enthusiasm that you share with me?
Sure. I'm excited about it. So if you take out your phone and go to ChatGPT, you can now buy things using ChatGPT, and Stripe is powering the payments behind it. So what does that mean for what we're talking about today? I think for small business, that's amazing, right? Because I can go to ChatGPT and say, I want to buy a Halloween costume for my daughter. She's really into Percy Jackson books, but she only likes, the female characters, and she's 9 years old. And I want to buy from a Black-owned business, or I want to make sure that it's a small business that I'm purchasing from. I don't want to buy from, I want it to be from the global south. Like you can do all of that. You can limit, it can get to know you better. And so just imagine like the access that opens up to all of these kinds of businesses that you wouldn't have had. Like I wouldn't have known where to, maybe I would have Googled it or something, I don't know, and eventually got to it. But ChatGPT is helping me get there faster and with more choice. And then for those small business like sellers who are making like Etsy type costumes, like imagine the world that opens up to them. So I think it's super exciting.
Yeah, and I'll just add that these digital assets, they have these like smart contracts wrapped around them, which allows this like almost like self-execution.
Yes.
So you can imagine agentic AI like processing a transaction, but being able to execute automatically and make a digital asset transfer that someone else receives in real time. So it's a very different vision of commerce. Anything further on, since I threw us that wild card on agentic AI in our digital asset panel, I don't know if Chrysty or G, anything you want to say on that?
So, it's adjacent, I think, to the to digital payments, but on the Square side, one thing we're looking really closely at is Square AI as well, and agentic commerce solutions there, largely to help merchants with inventory, adding this technology into your dashboard. So if you were, say, a food and beverage seller and you wanted to know what your metrics look like this time of day, this time of year, so that it could help you like with what supplies you needed to buy, you'd be able to do the same type of thing with ChatGPT, like you would with ChatGPT, using those large language models to go in and to be able to find that information in a way that was visually very accessible.
So I think we've given our small business owners a lot to think about of what the future of commerce may look like. But for a final question before we have to wrap, so we've mentioned this shutdown. Hopefully our Congress and our government will go back to normal order at some point in the near future. When they do, I'm going to ask each of you this last question. You get to wave a magic wand and pick, two policy or regulatory changes that you'd like to see that will really matter for Main Street in the digital asset context. Like, what do you think those two things are that would make a big difference? Amy, maybe I'll start with you.
I'll start with one maybe that's a little out there, but a lot of companies, including Bridge for Stripe, have applied for national trust charters. Like, there's a line of them, and so I think just like welcoming more different kinds of business into the regulatory perimeter will be net helpful for this entire ecosystem. So I'll just give one.
My wife calls me boring often, so I have very boring answers to this question. It goes back to market structure and tax to me. I think right now in the US, we don't have that comprehensive federal framework as to how exchanges should be supervised, whether a digital asset is security or commodity or somewhere in between. I think that is imperative for the US to lead. And again, as Chrysty mentioned, it is tax clarity. Those two things have to be addressed in parallel as soon as possible.
And you ended with tax. I mean, come on,
Exactly.
G. All right, Chrysty, please.
So, I mean, you kind of stole my answers, but I think it's really important. So the tax component is a huge part of what would really make a huge benefit in the digital asset space for small businesses, and then having more clarity around regulation. We have so much fragmentation between federal and state. If we had clear federal laws that were able to tell us which agency to go to, that provided us a more simple structure, it would make it easier for companies to better serve small businesses and customers as well.
Well, thank you. I think we've packed in as much as we can in a quick 30 minutes. Hopefully this was useful to the audience. So please join me in thanking our panelists.